Hello. Looks like we have people trickling in. Hi, everyone. Hi, Sam. My name is Natalie. I am an onboarding accountant with Collective, previously a new business advisor. Happy Love Day if you celebrate. Today we will be talking about something that I love, which is tax savings, and specifically for self-employed. So it looks like we still have a few people trickling in. I'll give us a couple of minutes. I appreciate you all being here with us. While we have people coming in, I'm going to go over the agenda for today and then some quick like housekeeping rules. So tax season's here. It's time to start thinking about taxes for 2024, even though we have 2023 tax deadline coming up in a few months. But if you are curious about an S Corp for 2024, this is a great time to start thinking about it, since we do have a deadline for the election coming up soon. In terms of housekeeping, you can drop your questions into the Q&A box so that they get answered live. I will have like a Q&A time towards the end. And then the chat box is like more for logistical questions or instant feedback about audio visual. So again, anything that's logistical, pop it in the chat. But if it's a Q&A question, we have a specific Q&A box. Sound good? Okay. There will be a discount code at the end of the webinar. And then as you guys know, we will be doing a raffle. So hang tight. I promise to try to keep this light and as fun as possible. And at the end, you will have a webinar discount code specific to today, and then also the raffle. I do encourage you guys to join our webinar updates group on LinkedIn. And then if you want to, you can do a shout out because we're doing this live. You can do a shout out on social media. We'd love to connect with you on there. Lastly, the webinar will replay. It'll be sent 24 hours to all of the attendees. So there will be an email at the end of the slide deck. So webinars@collective.com is the email you can send to as well. Okay, so I think we're good to probably get started. The agenda today is taxes you face when you're self-employed. It looks like I'm getting a Q&A question in the chat. Go ahead and pop it into the Q&A channel so that we make sure we answer that at the end of the webinar from Sam. Okay, so agenda today, taxes you face when you're self-employed. How S Corps can help you pay less in tax, how to estimate your tax, and how Collective makes taxes a no-brainer. And then again, Q&A at the end. So who is Collective? We are the first all-in-one financial platform designed for self-employed people. We know that self-employed people face some challenges. It could be a surprise tax bill. You have ongoing tax compliance. You have federal taxes. You have business deductions to think about. Can I deduct something? You have estimated taxes to think about. You have self-employment tax to think about. You're guessing about how much you might owe. Do you have enough money to pay for these taxes? These are all things that are on your mind. And it can make you feel confused when you're trying to figure this out. How do I keep up with this ongoing compliance? How do my deductions interact with what I owe? Do I have state income tax? How does that interact with my self-employment tax? So all of these pain points can leave you ending up feeling stressed and frustrated. So we have a poll. What stresses you out most when it comes to taxes? Is it, and we'll go ahead and launch that poll right now. Is it, it could be, is it calculating your taxes? Is it paying those taxes? Is it being hit with a large tax bill at the end of the year? You don't know that these estimated taxes exist. That could be the problem. You forget to pay your estimated taxes. you're fine. You're like, maybe you're trying to find someone you trust to calculate those. So go ahead and put in the poll what you're struggling with right now, and we can kind of take a look at that. How's everybody doing with the poll? Let's see here. Oh, looks like someone else just joined. We're doing a poll right now. What are you struggling with the most when it comes to these self-employment taxes? All right, let's go ahead and we'll give it one more minute and then we'll close out the poll. Let's go ahead and close out the poll. All right. So no surprise, the majority of you right now are struggling with taxes. So to me, this could mean you're either struggling with thinking about 2023 or what's coming ahead in 2024. Some of you are struggling with setting up your LLC or S Corp, and then some of you are struggling with, finding the ongoing compliance support. So don't stress. That's what we're going to talk about today. And hopefully by the end of this webinar, you'll feel confident in moving forward. Just a reminder, the Q&A, there's two boxes. There's a chat box where you can put in logistical questions. And then the QA is meant for the tax questions, which I'll address all of those at the end of this. Okay, so first let's talk about taxes that you are subject to as a self-employed person. Okay, so as a self-employed person, you're subject to two types of taxes. Income tax is what we generally think of when we hear tax. Individuals pay between 0 and 37%. That's your marginal tax rate. That's really just dependent on, how you file and how much income you report. Self-employment tax, this is really painful for a lot of self-employed people because it's a flat rate tax of 15.3% assessed on the net income of your business. It does go towards Social Security and Medicare, so it's a longer term benefit. But when you're an employee, so if you're a W-2 employee, half of that is covered by you, the employee, and withheld from your paycheck. And then the other half is paid by your employer. So you're splitting it with your employer. But when you're self-employed, you employ yourself, you're on the hook for all of it. And that's where it starts to get painful, especially if you don't have a lot of deductions. Here's a helpful visual because when you're an employee of a company, you can see here, you're splitting. Half of it your employer pays, half of it you pay. When you're self-employed, you're on the hook for all of it. So let's take a deeper look at how you're affected by these taxes. Here you are, you're, a hardworking business owner getting your revenue. You have tax deductions that you normally take, and then what comes next is your net income. It can either be a plus or minus depending on if you're profitable or if you take a loss that year. So the profit passes through to you as the owner. So you can either recognize that loss or that profit on your individual return. And what it's subject to is these two types of taxes: self-employment tax, that's 15.3%, and then the income tax. And that income tax portion is assessed on all your business profits, all other income you might have. So maybe some passive income like rental income, investment income. And then you'll make adjustments to that to get to your AGI, which will be like personal adjustments. Maybe you take the standard deduction, maybe you itemize. That is what you pay income tax on. So what is an S Corp and why could it be beneficial to you? So first, let's kind of back up and think about legal structures. This is where we get into the confusing abbreviations like LLC, single member LLC, LP, like what does this all mean? These are legal entities. They're distinct and separate from the owner that form them at the state level. So the most common ones that we see right now are probably LLCs, limited liability companies, and or C Corps. So the legal structure of your business is actually formed at the state level with the Secretary of State. So entities are required to file an annual report letting the state know who manages the entity. It's not your tax return. It's really, they just want to know how to get a hold of you. The formation and information returns that are done with those states, those are totally different than the taxing agencies. So think of the entity that you form, whether it's the LLC, single member LLC, or the corporation, those are done at the state level. Okay, so an S Corp is actually a tax election. So the IRS assigns you, your structure, a default tax treatment. So a single member LLC, if that's how you're operating, you are taxed one and the same as your business on your personal return. When you're an S Corp, you get to separate from your business for tax purposes, which means your business has its own return and you have your own return. So you're taxed separately. It's a tax election, so it's layered on top of the LLC. If the S election is removed, you just go back to being an LLC. So it's an important designation to make. Why are S Corps so great? Well, S Corp owners don't pay self-employment tax on their profit, which sounds too good to be true, right? But there's a catch. An S Corp creates an employer-employee relationship with your business and your entity. So it requires that your company actually pays you a reasonable compensation for your work. So you actually get to become an employee of your company and receive a W-2. You pay payroll taxes on the W-2 wage that you pay yourself. And these payroll taxes are the 15.3%, so the self-employment tax, but it's siloed onto the wage that you pay yourself. So half of the payroll taxes are withheld from your paycheck, and then the other half are an expense to your business. So what does this look like? You have your, all of your revenue is paid to your S Corp. You pay yourself a salary, and that is the portion that's subject to that 15.3%. You have expenses, so your qualified business expenses, and that reduces down the profit of your business. All of that profit still passes through to you to your personal return, and that's where you pay income tax, that federal income tax that we talked about. And that is, again, assessed on all other income and personal adjustments that you have. This is one of my favorite graphs, and I really think it drives home the concept here, because you can really A/B, what does it look like to operate as a single member LLC with taxed as a sole proprietor versus taxed as an S Corp? So in this scenario, the owner is bringing in about 160 in profit here. They don't pay themselves a wage because they're a single member LLC. So the full 15.3% self-employment tax is assessed on the 160. So that's over $24,000 just in self-employment tax. Then it passes through and is subject to income tax. So where the switch happens with the S Corp is you'll notice that of the 160, the owner is paying themselves $60,000 on W-2. So that's one way that they're taking profit out of the business. What happens then is that 60,000 becomes the vehicle for self-employment tax. So instead of being taxed on the full 160, now that shifts over to the 60,000 for a tax break of 15. That's 15,000, that's liquid to you. You can either reinvest that into your business. You can invest it into a 401k. You can finally take a vacation that you never get to take. So think of that as money back into your pocket. Now all the profit of the business still passes through to you and is subject to income tax, but you've mitigated a huge portion of the self-employment tax by giving yourself that wage. Right. So we like to say that the S Corp is a small business owner's best friend. The reason is that it's recognizing that not all of the profit that comes from your business is because of your work. Some of it is your return for building a business. Like you get to keep some of that money you earned. It also recognizes that there's, you're not a C Corp. There's not a large suite of corporate officers that are kind of making everything run in a more traditional corporate sense. You're the only one running the show, right? So there is no it's not necessary to have those two layers of taxation. All right. So how do you know what is best for you? And this is a big thing that we talk about on a call, if you were to schedule a call with Collective, because a webinar is, we're super general here. I'm going to keep it high level. But is an LLC best for you really could come down to how much you're earning. Like generally between 60 and 80,000 in net profit is where you need to start planning for something different, right? You're getting hit pretty hard with self-employment tax at that point. So that's when you should start looking at an S election. So think of, again, net profit being revenue minus your expenses. If you're landing above 60K, and this also could be dependent on where you live too, since different states have different taxes. So the nice thing about an LLC is it's very simple. It's straightforward, especially if you're single member LLC. There's no additional tax filing. With the S Corp, think about that as like, okay, I know I'm above 60K. I have some bigger goals. Maybe you want to maximize the retirement plan. Maybe you have enough cash flow every month that you're comfortable running a paycheck for yourself, really taking profit from your business each month and growing your business more. So we can, and please feel free to ask questions about more specifics around that in the Q&A. So, okay, so getting a salary through my S Corp is great, but how much do I pay myself? This is such a hot topic. I talk a lot about this when I talk to prospectives. The IRS just doesn't have, any hard and fast rules, I would say, around this. It comes down to facts and circumstances argument. Generally, it's acceptable between 35 and 40% of the business profit. That kind of passes what we call a smell test. That's not a set formula. You can see here on a Collective dashboard how we help our members find the right salary range for themselves. Again, if you're interested in going the S Corp route, our new business advisors would love to chat with you and just kind of see where you're at, what a good salary range would be for you. And again, a tax professional, any tax professional can help you kind of understand more of the legality around this. All right, so I'll pause for a second. We're going to talk about estimated taxes next. I'm sure for most of you right now, you've probably, if you're self-employed, you've probably gotten all of your 2023 1099s and kind of have that filing on your mind. But the reality is that just because one tax filing is coming up for 2023, you still have estimated taxes to think about for 2024. And this is where, you're kind of in a great position at this point in the year where you can stop the bleeding a little bit if you haven't been making estimated tax payments. So generally, who should pay estimated taxes? Anyone who thinks they will earn over $1,000 or more in tax as an independent contractor, someone that has your own business, if you file as a sole proprietor, or if you own entirely or share an LLC, you will most likely be paying estimated taxes. Are you earning income that does not I'll put it this way, ask yourself, Am I earning income that does not have withholding? If the answer is yes, then you should be paying estimated taxes. And remember that both the state and the IRS have those tax estimates depending on where you live. Today, we're going to concentrate on the federal tax estimates, but some states have specific rules that you need to follow. Okay, but why do I have to pay these? Well, the IRS uses a pay-as-you-go system, which is why normal W-2 jobs withhold from each paycheck. So estimated taxes are a way for the IRS to get you to pay as you go when you don't have that W-2 withholding. Okay, so let's jump into the basics here. All right. Taxes must be paid as you earn or receive income throughout the year. All right. So because you don't have a W-2, your taxes aren't being withheld automatically. So the burden of this is on you to calculate them, to save them, and then pay them to the IRS or the state. Okay. You must make these estimated tax payments if you owe more than 1,000. So because the threshold of 1,000 is so low, most self-employed people need to make them. So how do you even estimate what you're going to do, and how do you make sure you do it correctly is the question. If you don't pay enough in this tax through the withholding and estimated tax payments, you can, and most likely will be charged a penalty. And you may be charged a penalty if your estimated tax payments are late, or even if you're due a refund when you file, you still will be penalized for not paying an estimate in that quarter. So when are they due? Estimated tax payments are due on a quarterly basis. So April 15th, June 15th, September 15th, and January 15th of the following year. Those dates are subject to change based on holidays or a weekend. So always keep that in mind and on your calendar. All right, so let's get down to how to estimate these federal taxes. So here is, there's really two ways here. There's the safe harbor rule where you pay the lesser of the two of these. So you can pay 90% of the current year's taxes. So you'll estimate what you owe. So easy numbers here. You owe 1,000 in taxes this year. So you would multiply 1,000 by 90%. So 900, divide that by 4. So 225 each quarter. This is what you pay as your estimated tax. Or you pay 100% of last year's tax. So what you owe 2,000 last year, divide 2,000 by 4, that's 500 a quarter. Pay the lesser of those. That's the safe harbor rule. But then there's the other option, which is estimating taxes on the actual income and deductions. So you estimate your AGI, right? This is all of your income, minus certain adjustments like business expenses. And then you take into account your tax rate, your marginal tax rate, how you file, multiply that by your AGI, and that gives you your estimated tax payment for the year. You divide that by 4 to determine the amount that you should pay each quarter. I guess sometimes for freelancers or businesses with unpredictable cash flow, this might be more beneficial, kind of tally up your income each quarter and pay taxes on the exact amount. In this case, it might help you just avoid penalties for underestimating the taxable income, especially if you're in a year where you're expecting your business to grow. A little pro tip though, when you submit online for these estimated taxes, you want to make sure that you're selecting the correct tax period. You'd be surprised how many people do that incorrectly, and the IRS will ding you for that. So regardless of how you pay and how much you pay, it's really important to keep records of these estimated payments, including the date and the method, just to make sure you have that in case the IRS comes knocking. All right. So estimated taxes are not just for the IRS, they're for the state too. I live in California, so I'm going to use this as an example. So generally, you must make those estimated tax payments if you expect to owe at least $500, which is like really low. I guarantee most people owe that. If you live in California, you know how high our taxes are. If you're married, you pay about half of that. So you have to pay 90% of the current year's tax or 100% of the prior year tax. So they follow the same guidelines as the IRS. But with California, there's a little bit of an unusual structure to like percentage structure to how you pay those. So 30% is paid on April 15th, 40% June 15th, 0% on September 15th, so you get a little break. And then 30% of those estimated taxes are on January 15th of the following year. Okay, so what happens if you don't pay estimated taxes? I think this is what scares most people. The penalty is minor, but you will be subject to an underpayment penalty and interest when you go to pay your tax bill. Most people don't even realize they're paying it. It's usually a couple of $100. So they don't realize that that's kind of tied into what they're paying in their tax bill. So if you don't pay them, and also it does mean that you have a big tax bill waiting for you at the end of the year that you didn't expect, or maybe you didn't save for it, or maybe you oversaved and you could have been better using that money to grow your business. So again, I want to reiterate that even if you are due a refund when you file your tax return, you can still be hit with that underpayment penalty for missing the estimated tax payment because you didn't pay as you earn the income. So the IRS does calculate your underestimated penalty. So based on the return that you file. I'm sure there will be questions about that. All right, so estimated taxes as a sole proprietor versus an S Corp. As a sole proprietor, you do, that you have zero withholding because you don't get a W-2. So it is on you to estimate that amount of income that you expect to earn through the year and pay estimates on that entire amount. With the S Corp, a benefit is that you are on payroll with your business. So you are incrementally paying in throughout the year. You can also choose to increase your W-2 withholdings to account for income earned through the year. If you don't do that, you still have to make an estimated tax payment, but it will just be on the profit that does not run through payroll. All right, so what can you do now to make your 2024 tax payments lower? That's why we're all here, right? You should consider an S Corp ASAP. If you're in that income range that we talked about, 60 to 80K, this might be the time for you to consider it. You could be maximizing more of your take-home pay, better accurately estimating those Q2 taxes and going forward. There's a little note here. On average, our members save about 10K a year. So we have a team that's readily available to talk to you. We don't want you to have to deal with this again and have peace of mind moving forward. So, freeing up a lot of that mental energy, giving you time to focus on growing your revenue. All right. So the tax savings of an S Corp are substantial. We've already seen that, but running them can be complex. You have formation, maintenance, ongoing financial clarity is critical with this, right? Because you're forming a legal structure that has its own filing requirements. So an LLC is at the base of the S Corps that we form. An EIN is required. You're going to have a whole separate financial identity from your business. The S election is required. That's coming up. That's due on March 15th. And that is a form called 2553. On that form, you state that you plan to operate as an S Corp for the year and be taxed that way. The ongoing maintenance, there's state compliance. You have to be aware of what to pay yourself. You need to have a payroll software, pay quarterly tax estimates. and then the annual state and federal income tax return that's due for your business. So again, you have a separate return for your business that's due a month before your personal return. All right. So what are the benefits? You can have accurate and consistent bookkeeping, and that's something that you have to have with an S Corp. You're a mini corporation, so you have to keep a set of financial records. And then you might be managing like a self-funded retirement plan. So there's 401k, SEP IRA. You will also have other benefits of being able to, run your health insurance through the business, things like that. We'll get into that a little bit more. All right. Okay, it looks like we have a poll. Are you interested in switching to an S Corp after you've heard all of this information? We have yes, I'm in, not just yet, I'm still not sure. And it looks like we are getting still getting some questions in the chat here. Go ahead and pop them over to the Q&A so I make sure I get to all of them. And just a reminder, if you hang in there, there is the raffle gift card. It is only for those who stay through the whole time. So hang in there. I know this is meaty. There's a lot of information we're trying to get through in a short amount of time. All right, I'll give the poll about 1 more minute. There's also we'll also have a discount code for collective at the end of this too. So if you do want to schedule a call with one of our new business advisors, they'd love to meet with you and kind of just talk through more of the specifics of your situation, since this is, I have to keep this high level with general information. So, all right, let's go ahead and close out the poll. Okay, we're about split. Yes, I'm in. I'm still not sure yet. Okay. Hopefully answering some of the Q&A questions will help you understand if this is the right route for you. So collective, I'm going to talk a little bit about collective, what we do now. Currently, we're in all 50 states, supporting all 50 states. So, we aim to be the all-in-one solution and having this all optimized for you in one place. We have ongoing bookkeeping support. Gusto is the payroll provider that we've partnered with. So they power the payroll piece, ongoing financial advice, retirement and health benefits advice, ongoing state compliance, S Corp taxes, and S Corp setup. All right, so what you can expect with collective. For the S Corp formation, we would form your LLC and S election. We would get your EIN, so you don't need to go to, legal Zoom. We handle it all for you. Retirement plans, we can give you some advice around that, reasonable compensation, and then you can set up your health insurance through your S Corp. For bookkeeping setup, we actually have collective accounting now. So it's an all-in-one experience from our dashboard. Bookkeeping is done by our amazing bookkeeping team. They'll clean up some messy books if you have that. They'll help you understand what we're doing behind the scenes in terms of bookkeeping, and then running a profit and loss each month. So you can analyze how much money you can actually take out of your business. I think that's a huge pain point for a lot of you is, can I afford to take money out of my business? Or should I be just socking it away for tax, right? By taking a proactive approach to the bookkeeping, we can solve some of those problems. So we do offer full service bookkeeping, estimated tax calculations and reminders, reasonable compensation adjustments based on, situations. For a lot of you self-employed people, you have fluctuation in your profit throughout the year. So there could need to be an adjustment to the salary that you pay yourself. We're there to help you with that. Reminders to file your important paperwork with the state. A lot of people miss those reminders. They come in California, they send them in the mail as a postcard, and like everybody loses that. So we're there to stay on top of those to-dos for you. You also have a dedicated team, a bookkeeper and an account manager. Those people are there, unlimited availability to you to ask questions or advice. And then the annual tax preparation for your business, state and federal, and then estimated tax calculation and reminders. So we're really comprehensively one-stop shop for you to have an S Corp. All right, how much do you think collective costs? And hopefully this says, yeah. How much do you think collective costs? You guys can pop it in the chat. Just, you can humor me here. 100 a month. That would be a bargain. That's how much just like QuickBooks software costs. 500 a month, 349, 250 a month. Okay, 500. Let's see. We cost 349 a month plus a one-time onboarding fee. Again, we're doing your bookkeeping. I mean, I challenge you to find somebody that can will touch a monthly bookkeeping for under $100 a month. So we're doing all the categorization for you. Again, that's done on a monthly basis so that we can really stay on top of what you're going to owe quarterly, right? All the software costs are included in this. And again, if you need any catch-up bookkeeping, ongoing, back office support. And then taxes. I mean, that's a huge one. Think of the big check that you write to have your taxes prepared. We're really amortizing the cost of that out over a 12-month period. So what's this one-time flat fee? This is actually a one-time flat fee that just encompasses the work of, if you're an existing LLC, we're verifying that your entity is in good standing. We're going to do some setup and catch up of the payroll, because remember, if you plan to operate as an S Corp for 2024, you should be running a paycheck for yourself immediately. So like, last month, basically. So we'd kind of assess if there needs to be any catch up done there. We're going to do the employer registrations with the state. That can be a big fine depending on who you have to do that for you. And then we're going to do any cleanup, catch up bookkeeping, regardless of how many accounts you have or how many transactions you have. All right. So your membership is tax deductible. It pays for itself immediately. So for everything we provide, it's really a cost-effective solution. Let me go ahead and go into how do you do this. You can schedule a call with one of our tax advisors. We do have a discount code for half off your first month. And let's see here. I'm just looking here. Oh, it looks like we did the raffle too, and the winner is Lyde Thomas. Congratulations. Are you still with us? I don't know if Lyde's still with us. Okay, so go ahead and scan it. You can either scan this I can't speak right now, QR code, and then you'll also get like a whole copy of the webinar after the call too. So that'll be available to those who did attend. And then Lyde won the $25 Amazon gift card. I'm going to go ahead and dive into the Q&A unless, oh, let's see. Okay, awesome. All right, I'll go ahead and dive into Q&A now. For those of you that are still with me, I'm just going to take a little sip of water. All right. Let me stop sharing here. Okay. So Kim is asking, will this recording be sent? The answer is yes, it will be sent out to whatever email you registered to register to the webinar with. Okay. All right. Lindsay, am I taking enough deductions? That's hard to answer because I don't know how much you make in your industry, what type of deductions you're able to take. Maybe you could elaborate a little bit more on the question. All right, I have another one here. What did you say the self-employment tax rate can depend on even though it's a flat rate? Oh, great question. So the self-employment tax rate does not change. There is a cap on self-employment tax. It's 160,200. That's the cap. So everything you earn up to that cap, or everything you report as self-employment income is subject to the 15.3%. Your net income can change, and that can change how much of your profit is obviously subject to that self-employment tax. How do I calculate my QBI deduction? Interesting question from anonymous attendee. There are a lot of free calculators. I've done this for myself before. I've just used a free calculator online. I would just search QBI deduction calculator, and that's the easiest way to do it. Okay, if you get a W-2 from the S Corp, I thought we don't pay 15.3%, or we just pay our share. Happy to re-clarify that question. So anonymous is asking, if I get a W-2 from my business, I thought I didn't have to pay self-employment tax. When you get the W-2 from your business, that actually becomes the vehicle for the self-employment tax, which is why there's a little bit of strategy, right, about how much you pay yourself with that reasonable compensation. So think of it, it's not a livable wage that you're paying yourself, because you're going to be you're going to be getting reimbursements from your business. Like if you do the accountable plan, you're going to be taking distributions of your profit as well. So typically with that salary, there's a range, there's kind of a sweet spot for it. So like in this scenario that I showed, there was 160,000 in profit. The owner was giving themselves a paycheck of 60,000, right? So that's for the full year. So amortize that out over a 12-month period. You're getting a salary each month. So that salary is what you're owing the self-employment tax on, not on the full 160. So instead of paying 15.3% on 160, now it's just on the salary. So hopefully that clarifies that question. Someone's asking to share the QR code again. I'm going to do that really quick. Will this be available as a presentation format? I'm not sure. Sarah, do you know if the slide deck comes as well, or is it just the video? Okay. Oh, here's the QR code. All right. How do you calculate how much wages you pay yourself as an S Corp owner with no employees? You're the solo shareholder. That is, again, it goes back to a range. So about, I would say the average small business that's earning between 50,000 and 200,000 in net profit, the owner is paying themselves anywhere between 35 and 50% of that, right? As your net profit grows, it starts to become more of like a facts and circumstances test of how much would it cost me to hire someone to do my job. So I'll give you an example. If you're making, 500,000, so $500,000, paying yourself 50% of that might not be reasonable, because if the average wage for what you do in the area that you live in is about 100,000, that's when it might come down to more of a facts and circumstances test. So hopefully that makes sense between, the percentage based method, because if you were only earning, if you were earning 60,000 and paying yourself like 60% of that, you're still not really hitting a facts and circumstances test, like for an average salary for what you do, right? So finding the percentage base when the profit is lower is generally what people do. We have a great tax calculator. I don't know if I could share it in the chat, but we have a tax calculator on our website that helps you plug in your estimate and profits, and then you can see there's an area where you can kind of adjust what you pay yourself as a salary. I recommend checking that out if you're curious about like what range would make sense for me. Is it a good idea to contribute to a SEP as a sole prop? You can only, SEP is only available for LLC or S Corp. So you can't. Okay, what is the point, or at what point does it make sense to go from a single member LLC to an S Corp? Again, that really comes down to how much are you earning? This is a question from Anthony. At what point does it make sense to go from a single, and hopefully I answered this during the webinar. But I'll just touch on it again. Let me make sure there's no in the chat here. Okay. Really it comes down to profit. So again, if you're earning above 60,000 net profit, that's around the time when it makes sense to look at it. There are some states with higher state tax. I'll name them off: California, New York, Tennessee, Washington, D.C. In those states, there is some more additional tax imposed on an S Corp. So usually around 80,000 in net profit is when it makes sense to look at that. And I think I answered the next question, which was, when you say 60,000 in profit, do you mean net profit after expenses? Yes, net profit after expenses. Okay, if I make 60K in revenue and take 15, oh wait, sorry, Dave is asking, if I make 20K in revenue and take 15K as a W-2 employee and then leave the other 5K in the business, do I still pay 15.3% on the 5K? Yes. Or wait, sorry, let me reread this question. The answer is no. If you leave 5K in the business, no, you don't pay 15.3% on it, because the 15.3% is a self-employment tax. So if you were an S Corp, that self-employment tax would be siloed onto the wage that you're paying yourself, which is that 15K as a W-2 employee. So the 15, you would only be subject to income tax on that 5,000, which is federal and state income tax. So even if you leave it in the business, you still have to pay income tax on it. It's all your profit that you pay income tax. Okay, let's see here. Robert's asking, sorry, I missed it. When can I go from an LLC to an S Corp? Does it have to be filed by a set date? Yes, the due date is March 15th, so about a month from now. After that, it's considered a late election. Okay. Do you have to start with an LLC first? Yes. So the LLC has to be at the base. This is a great question, because if you're operating as a sole proprietor today, February 14th, this is the right structure for you. You need to make the switch to an S Corp. You're getting hit hard with taxes. It's time to turn a new page, right? In 2024. You need to get an LLC set up ASAP, because you can only elect back to the date of your LLC formation. So, for example, if you went out and formed an LLC tomorrow, your S election would count towards February 15th. So LLC must be formed first before you can have an S Corp. Oh, I love this question from Anonymous. What is the benefit of applying for an LLC rather than being a sole proprietor? The benefit is liability protection. So limited liability company, that means you, the owner of your business, is you're legally protected from any debts of your business, so that they can't come after your house or anything like that. If you were to get sued or whatever, knock on wood. But LLC also does, like, just from a business standpoint, it kind of provides a little more legitimacy to what you're doing. You rather than having your social security number floating around when you take contracts, you have a proper business, you have an EIN that you operate under. It allows you to start establishing some business credit because your business has its own financial identity. Hopefully that helps that question. Some of these, I have a lot. I'll try to get through all of these today. I noticed some people are putting some questions into the chat instead of the Q&A. Let's see here. All right, Dave asks, if I have sporadic income, one month I make 20, other months I make 2K, can I adjust my W-2 income each month as well? In other words, can I pay myself via payroll 8K one month, and then the next month 1K, and then the next 3K? Or does it have to be the same every month? Great question, Dave. You can adjust it. You're looking to hit a target, right? And especially if you're new to an S Corp, you're going to want to get your feet wet a couple months and really understand the profitability of your business. So that's why we set a low wage. Remember, it's not your livable wage. So you set a low wage enough to, kind of fulfill the requirements, reasonable compensation with the IRS, but it can be paused or catched up later if you have cash flow issues. The IRS police are not monitoring your payroll. What they want to see at the end of the year is that you've given yourself a paycheck and that you've taken distributions and that the two are reasonable in relation to each other. So yes, you can absolutely adjust your W-2 income. You're hitting you want to hit a target by the end of the year. And you want to make sure you're giving yourself a paycheck before you just pull distributions out of your business, right? You want to run that paycheck. The rule is to run that paycheck in order to take a distribution. Okay. I'm unclear. As an S Corp, are you filing two sets of taxes, one personal and one business? Correct. Your business has a return that is due on March 15th. Your business gives you two forms to prepare your personal return. So in essence, your personal return becomes a lot less complicated because all the business activity is reported on the S Corp return. The S Corp return is more complicated and more costly, and that's usually why it involves hiring a CPA or collective to file it for you. Okay, David asks, why do you recommend the 60K threshold to elect S Corp? If I make 30K a year and don't mind doing the extra paperwork, is there any other reason why I shouldn't elect S Corp for my LLC? That's a good question. The 60K, it's somewhat of a collective threshold. We want our costs to make sense in relation to what you're saving. Really, the barrier to entry for an S Corp is like, is my business profitable, right? Year over year, is this going to save me enough money in tax that I'm going to see the benefit of it. So you could have one year where you bring in 200K net profit and you have a bad year the next year and 30K. So you don't see as much benefit from an S Corp, but year over year, it should be saving you money. Hopefully that helps answer your question, Dave. If you're an S Corp, are you paying estimated taxes on your total earnings or just on your business income? You're paying estimated taxes on the profit that you don't run through payroll. So remember, when you give yourself a paycheck, it's withholding the payroll software, if it's doing its job, is withholding the tax and remitting it to the taxing agencies. But let's say 1 month, you have an unexpected bill and you need to pull $5,000 out of your business. That's called a distribution. And those distributions are free of self-employment tax, but they are subject to income tax. So at the end of the year, when you go to pay taxes, you'll see cumulatively all the distributions you took through your business. When we estimate a tax payment for you, we're estimating it on the profits that didn't run through payroll, whether you left them in the business or you took a distribution. Are quarterly tax payments only required for S Corps? No. Kind of, going back to square one with this, if you have earned at, even $1,000, you owe estimated a quarterly tax payment on that. So if you go out, do a gig, they pay you $1,000, the IRS is going to want a estimate of that tax payment on April 15th, or an estimated tax payment on that on April 15th. If you're already an LLC, can you designate the S Corp structure, or do you have to set up something separate? That's a great question. If you're already an LLC, that's good news for you, because you can just layer the S election on top and it can be effective back to January 1st. So, and this question came from Cindy. So Cindy, this is, if you're considering this is a great time for you to, either schedule a call with us or look into this further, because again, you have until March 15th to file that S election, and that will make, that will change how your LLC is taxed for the full year, going back to January 1st. Okay, so Stephanie is asking, so when you're giving the 60 to 80K income, you mean profit after paying yourself and business expenses? No, just business expenses, not after paying yourself. So think of like qualifying business expenses, like, office expenses, meals, job supplies, all of those qualifying business expenses. She's, as a new business, I'm still not making a lot of profit, but I am being advised to go ahead and switch to an S Corp. Well, what our business advisors would say to that is, if you project over the next 12 months to make between 60 and 80, then this will, this will benefit you, because the downside of waiting to elect is that you could have just a partial year that's treated as an S Corp instead of the full year. So if you're looking out over a 12-month period and it's like, yes, I know I have these contracts coming in, I know that I'm going to make, 100K, then it still would be advisable to go ahead and switch. Can we deduct advisory fees such as collective as a business expense? Yes, that's 100% deductible. Okay. As a trucking company, I don't work hourly wages, but more by loads cost. If I get a load for 400, then I get that much. How do I calculate for a W-2? I think I understand the question. You would really just kind of, you'd estimate really, like, I would say, look at the prior month, how much you made and what you project to make for that month, and then maybe pay your W-2 might be 30 to 50, 35 to 50% of that. Dave is asking for payroll. Can you pay yourself a salary once a quarter instead of every 2 weeks? Can you pay yourself in a giant sum at the end of the year? Do you have to pay throughout the year? It's best practice to pay yourself throughout the year. If, again, you want to be paying into those, what you're going to owe. And if you wait to give yourself a paycheck at the end of the year, there's going to be a huge lump of taxes associated with it. So it's not just as simple as like, I'm writing myself a $50,000 check. There's going to be taxes that you have to pay immediately on that 50,000 on a paycheck. So it's better to break it up throughout the year. You also shouldn't be treating your business like a bank account, a piggy bank. Just taking money out whenever you need to. You should be following the rules, giving yourself a paycheck, and then taking a distribution later. Okay, I'm already an S Corp, but I haven't finished all the state licensing. I got the EIN, the LLC last year. Can I still file as an S Corp? Yes, you can, because the S Corp is a tax designation specific to the IRS. So you're totally fine to still file as a S Corp. I think that's the question you're asking. I don't know when you filed to be taxed. I got an EIN. Maybe, do you mind just expanding on that question? Because maybe I'm misunderstanding it. What are additional costs to being an S Corp that you wouldn't have to file if you're a sole proprietor? So again, there's that additional tax return with the S Corp. That's a big cost. You have to keep a set of financial records, so a bookkeeping software. And then you have to run a payroll for yourself. So a payroll software is probably going to be anywhere from $50 to $100 a month. We include the cost of Gusto in our subscription, so you don't have to worry about that. Athena says, if I think I may move states in the next few months, is it better for me to wait to set up an S Corp? We move a lot for my partner's work, so we may move again in the next year. Is it possible to set up my S Corp in the state, but may move? That's a great question. So it does become a little bit more difficult to sort of like move this entity around. If you have a home base state, that's where I would form your LLC in, and then elect, because remember, at the base is the LLC. So if you move, you have to like ask the state's permission to move your LLC. So it can become quite costly and complicated. Still, for most people, the tax savings outweigh like the pain points of that. But I would say you can form in the state that that you're living in. So what does that mean? Your physical presence mean? It means it's like where you have a home address, where you have a driver's license, where you're registered to vote. All of those things point to where your home base is. Now you can always, leave the home base of your LLC somewhere and foreign register into another state. That probably sounds really complicated and overwhelming. It's not, it's very common that someone leaves the base of their LLC and foreign registers into the other state. In that case, then like as the S Corp owner, you can move and you receive your paycheck and pay taxes where you live. I think I already kind of answered some questions about like, what's the cost? Okay, so Liz is asking, I just opened my business in the fall of 2023, and I am choosing S Corp from the beginning, although I have less than 1,000 in profit for 2023. What forms are essential for me to file this year? So Liz, does that mean you already set up your S Corp? If so, you have a tax, if you set your S Corp up in 2023, you have a tax return that's due in March. So March 15th is the filing deadline for the S Corp regardless of how much you made. And you want to make sure to engage someone to file that for you. Okay, Liz says yes. Okay. So Andrew says, what happens to the money left in the S Corp if you're only paying yourself a 35% salary? I think I've answered this in a couple of different ways. The money left in the S Corp is subject to income tax on the federal and state level. So again, that's your marginal tax rate, anywhere between 0 and 37%. Dave is asking if Collective works with QuickBooks. We have our own accounting software now, Collective Accounting, that's in the accounting dashboard. It has all the same functions as QuickBooks. I mean, I should be more specific with that. We built it geared towards self-employed people. So if you have more robust or complicated situations, it might not be the right for you, but it does, it is a solution for self-employed people. If I live in California, create my LLC or S Corp in Delaware, do I need to file in Delaware? Yes, you have a filing requirement in Delaware. So you will have both a filing requirement in Delaware and in California. So you'll have to file in 2 places. What happens to my current LLC name if I switch to an S Corp? That's a great question. Your LLC name stays the same. Nothing changes about that. Your EIN stays the same. You're just electing to be taxed differently. Okay. Is it okay to file S Corp even with 25,000 income from last year? Well, if you project to have between 60 and 80 in 2024, that's fine. It doesn't matter what you earned last year. I mean, it could help you to project what you earned last year, but if you plan to earn again over 60K for 2024, then you should elect S Corp. Okay. Matt is asking, I have an accountant locally who is going to set up my S Corp. Can you take over the process once I set that up? Yes, we can. We can bring on existing S Corps, or if you're just starting from scratch, we can help you start. And we include that in our cost of our membership. So if you haven't paid the local person yet, you could use us. Is Gusto and Zero included in Collective's monthly cost? Again, Gusto is included. We cover the cost of that subscription. If you shop it outside of Collective, it starts at about $50 a month. And you don't have to pay for any bookkeeping software. We use Collective Accounting. We don't use Zero anymore. Do you help with past tax issues? I haven't filed in 2 years. We don't do past taxes. We have a partner. I'll mention them here. Tax File is great if you need something that's affordable and pretty straightforward to get priors caught up. I would recommend looking at them. Tax File. I'll pop it in the chat here. Okay. Oh, Anthony says, if I prematurely set up the S Corp election in 2023, can I remove it? I don't think my side gig will make enough money to benefit from an S Corp. Yes, you can revoke your S status. And so that's the term, revoking your S status. So I would recommend either talking to like who you have in line to prepare that S Corp return. Like if you made that election in 2023, you still are going to have to file a return, unfortunately. but you can revoke the status and file it as a final return. Yeah, there's a couple different layers to this question, especially like if this is a side gig, and you don't anticipate it, continuing on, it's probably best to just let it dissolve, or to dissolve it. Let's see here. I think I have the QR code up. Someone just asked about it again. Am I sharing? I'm sharing the QR code, right? Okay. Athena's asking, the fees include all tax prep and tax submission e-file. Yes, our fees too. How do I switch to an S Corp? Pearl wants to know. Do I go to the Secretary of State and fill out the paperwork? The Secretary of State is for like keeping your LLC alive, is where you file your statement of information. So no, the S Corp election is filed with the IRS, and it's a form called Form 2553. And that gets filed with the IRS. Again, you can't file that unless you already have an LLC in place. I'm getting customer payments in crypto. Do you do accounting in crypto? We do not do accounting in crypto. It can depend too. Like some people get paid in Coinbase and then convert immediately over into USD. In that case, sometimes we can figure out a workaround, but we don't do like the actual accounting in crypto. Do I need to pay myself in the first month of my business as I establish it? And if so, how do I go back to do that? Is there an issue? Is there an issue when I pay myself? You don't, no. The long and short of it is no. Like let's say, you started in January and you didn't really earn much. You can wait, you can run your first paycheck this month or next month. That's okay. You don't have to run it. You might want to do like if you want to be an S Corp, you really should run a paycheck in this first quarter of this year. I mean, that's kind of the whole point of it. And you saving money. Now, there are instances when, again, you might do this for a short year. That's when you should talk to one of our business advisors. I mean, they're really going to help you understand when you should do this. How do you recommend people to determine their W-2 compensation, especially those who are in service businesses and don't have anyone else in their company? I think that, and again, if you join late, we did go through part of this, the reasonable compensation piece, or I know it's a webinar, so things get missed if you're, doing other things in the background, but really reasonable compensation, it's facts and circumstances test. Most small business owners are paying themselves anywhere between 35 and 50% of their net profit, even if you're the only one in the company. Jen says, I have an S Corp and many LLCs that feed into it. Would that still work as an S Corp? I might need some clarity on that question, because if you already have, I don't understand it. It sounds like you're describing as a holding company. So if Jen, if you're still here, you can pop in more clarity on that question. Okay, Sergi's asking, when's the deadline to form an S Corp this year? It's March 15th. Do I need a lawyer involved to open a business? No, you do not. Actually, that's like the most expensive and ridiculous way. I don't want to offend any lawyers, but that's probably the most expensive way to do it. You can have a CPA do it. You can go to LegalZoom. You can have Collective do it. We include it in our cost. Now, you could have like a very niche specific business. I don't know, you could have a PLLC, or you might need someone with more expertise in forming the business, but yeah, they're going to charge you probably, like double what a CPA would charge you. Let's see here. How's everyone doing? I know we're getting close on time, so I'm trying to go through ones that are not repetitive here. If I profited 100K even years and 20K odd years, does an S Corp still make sense? I feel like that's too big. I would just need to know more about your situation to help to understand if it would make sense. I like this question. Does an S Corp subject you more to IRS audits? No, actually, your likelihood of getting audited decreases significantly. Oh, Kelly, I am an LMFT therapist and we are not able to form an LLC. Can we go right to an S Corp? That's a great question. So some states, and for most therapists, you're required to do like a PLLC. So it's a professional, you can still be an S Corp, but just the way that you get there is a little different than most businesses. So a professional corporate or a professional corporation or a professional LLC. So it's just a different designation at the base. You can still elect S status. What is the average processing time of forming an LLC if I were to file tomorrow? That depends on your state. What state are you in, Karen? If you're still here. Oh, California, it's like 10 right now, like 10 to 15 business days for the LLC formation. I think I can't remember the expedited fee. It's kind of steep. It's over like $200, I think, to expedite it. But yeah, I would say I'd recommend getting an LLC formed ASAP and expediting it in order to do the S election by March 15th. Pearl's asking, how do I switch to an S Corp? Do I go to the Secretary of State to fill out the paperwork to switch? No, the S election is filed with the IRS. The Secretary of State is specific to the state. So if you're already a single member LLC, you just fill out the form with the IRS to become an S Corp. Are you saying that reasonable compensation can be below a livable wage? It's not intended, generally it's not intended to be your livable wage, right? If you are making 60K and paying yourself 50% of that, which most people recommend, like 50, you hear the different rules, 50-50, 60-40 rule. Most people can't live off of 30,000, right? So you have to think of that reasonable compensation or the salary you pay yourself as not necessarily being the livable wage, but part of what you pay yourself from the business. You're taking wages out by salary and distribution and then reimbursements. Brian's asking, if you're a collective customer and you decide later to build an internal team or you want to handle all of that on your own at a later date, what is the process? That's a great question, because there could be, our niche really is businesses of one. That's not to say that we don't have members that grow within our service offerings. But if you decide that you want to leave us, you simply stop paying the subscription. You know, let us know that you're going to be offboarding. There's no cancellation fee. We transfer the subscription of Gusto back to you so that you can continue to stay in compliance with the payroll piece, regardless of, you know, whether we're managing it or someone else internally is. Can you, this is a tough question. Tough just in that it's hard, depending on what tax professional to talk to, they might give you different advice here, but can you make the election for 2023 retroactively to take the benefit? I've been telling people that, you know, I feel like the ship has kind of sailed for 2023 just because, as you can see, there's a lot of compliance pieces to becoming an S Corp, and we have the tax return is done, or sorry, the tax return is due on March 15th. So, you know, you'd be like that, the timeline would be so tight to try to do that, and you'd be doing a late election, which we're finding it more common that those are rejected. So then you're kind of in this weird limbo. It's a lot of headache for usually minimal savings after you pay someone to kind of do all of that for you. Do we get double deductions if we file 2 returns? Business is itemized and personal is standard. So you still get to take the standard deduction on your personal return. So you know, your profit of your business is reduced by your business expenses. That profit flows through to your personal return, and then you get to take the standard deduction on. Oh, sorry, Sam, you haven't answered mine yet. Do you have an actual W-2 or can we keep track? Sam, sorry, can you there's a couple questions from Sam here. Can you deduct tax prep fees on an S Corp, and can we elect for 2023? Can we go back? So I think I just answered that. You can deduct your tax prep fees. Yes, absolutely. It's a tax deduction. The other question Sam had is, do you have an actual W-2 or can we keep track of everything in Excel? I think I understand the question. You have to keep, you know, a payroll software company. So like Gusto is how we do this. And what that means is when you run payroll for yourself through your business, a whole slew of filing requirements come. So each quarter you have unemployment tax returns, income tax returns that are all related just specifically to payroll. So there's a lot of heavy compliance to there, which is why it's better to just use an automated software or a payroll company to do that. If you track it in Excel, you still have to make the payroll tax deposits and file those returns. So it's very complicated. I highly recommend just you want to pay, you want to engage someone else to do that on your behalf. So yes, you have an actual W-2 that you get from your business. It's not just like just a piece of paper that you track. You get an actual W-2, you get a paycheck. You're separate from your business. I think those were your questions, Sam. Let me know if I missed any other ones. Oh, so I think Jen is clarifying. I have an S Corp and I want to purchase properties, each with an individual LLC, and one LLC for me as a real estate agent for liability purposes. I was told I can make an S Corp to be an umbrella. Yes, that's called a holding structure. You can do that. We don't support that. That's very complicated. Each LLC, depending on how they're structured, could have their own tax return. The S Corp could have their own tax return. So you really want to have like a CPA that's able to handle all of that compliance for you, because it gets pretty detailed quickly. Yes, but Jen, to your point, you do want to separate out the liability with those properties. You want to have an LLC for liability protection for each property. If I have a client who refused to pay a given service fee, can I collect this? Can I deduct this as an uncollectible debt? It depends. I would ask, like, if you have an accountant, I would ask them, or CPA, I would ask your CPA. I don't know your situation. Let's see. Oh, we don't, here's a question. Do you guys help with forming a PLLC for healthcare professions, or would this require specialized help? We have not expanded to supporting PLLCs or PCs for licensed professionals, like in healthcare or like lawyers, for example, CPAs, anyone that might has a professional designation. We're growing, so we're expanding. I would say maybe check back in with us next year, see if we've expanded to that. But we have not yet. Are you guys CPAs? We do have CPAs on our team. Does the 50% off collective discount apply to the one-time onboarding fee as well? It applies to the subscription for like the first month of subscription. So no, it does not apply to the onboarding fee. But talk to a business advisor, they may, be able to help you out. Jen is asking, would all the LLCs act as one S Corp? No, they act separately, and then the profits flow back to the S Corp. So again, this is a complicated structure. I would recommend talking to either CPA or lawyer about how they could support it for you or make it work right for you. Oh, when you hire your kids, will they have to pay FICA? But if they are under the LLC, they don't have to pay FICA. If you hire your kids as a W-2 employee, you will pay FICA taxes. You'll pay payroll taxes on their behalf, right? Because you're employing them. They're an employee of your company. I think what you're asking is if they're on the LLC, you wouldn't have to pay that. And maybe what you're asking is I could just pay them as a contractor. Again, we have a great article on this and more of the rules that go into paying your kids. I would recommend looking at. I just realized we're at time. So hopefully I tried to go through these questions as best as I could to pull out the ones that were Pearl, yes, you can. Again, let me, I wish I could just give you that article, but we have a great article that talks about the rules about paying them, but yes, and it could be state dependent, but yes, you can pay them. There's a lot of rules around it though, so it's not as simple as TikTok or Instagram Reels are making it sound. Paying your kids. Okay, so everyone will get a recording of this. Thank you so much for those of you that hung on for the Q&A. I hope that I was able to shed some more light on this. Again, we'd love it if you oh, there's the article in the chat. Thank you, Sarah, for popping that in the chat for Pearl. We'd love to chat with you if this is something you're interested in for 2024. Again, we have that deadline coming up, so it's a great time to really think about this and maybe talk to one of our advisors one-on-one for more of your specifics about your situation. All right. Thank you everyone for being with me. Have a great rest of your Valentine's Day. Bye.